Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the market continues to trade in that band of 19,300 to 500. And it's the 7th day that we have been stuck in that range of around 150, 200 points. If you look at just today, we have been just around the 19,450 mark. But yes, part of that broad range. The only specific factor to watch out today is the outperformance coming in from the broader markets. So the small cap 250 has actually hit the record high today, and it's the mid cap and the small cap index which are outperforming, because if you look at the Nifty and the Sensex, they're absolutely flat with a bit of an underperformance coming in from the banking names. Talking about banking names, it's PSU banking names which are seeing quite a bit of move today, so we are watching out for that, and Pharma is the other one that we are watching out for. So these two are your top gainer at the index level. IT, it's going a bit weak into the earnings. So of course, TCS, HCLTech, and now Wipro as well. Wipro will come out with its earnings tomorrow. So let's pull up the intraday chart of all of those three. TCS is fairly quiet ahead of its earnings. HCLTech has been on a downtrend, and Wipro too is very, very tempered, not trying to build any expectation at this point of time. Macro data as well, a lot to watch out for. In the evening, we'll get the US CPI, the India CPI, as well as IIP. So a lot of macro factors to watch as well. But Aisha continues to be very stock specific, and of course, it's the Delta and Nazara twin that we are watching out for very closely.
We are considering, had Delta not been in an F&O ban, one shudders to think as to what could have happened to this stock. Nazara, of course, has clearly recovered a whole lot from the word go. Because remember, to start off with, in the pre-open rates, it was down about almost 10%, open with, I think, a 6 to 7% gap down, and from there it's seen a meaningful recovery, still lower, but now only down 4%, and I only say 4% relative to what it opened with. Having said that, Nazara also clarified, and we'll play that soundbite as well for you, that they generate only a 5.25% income from skill-based real money gaming, which is why they're not going to get impacted by this GST of 28% that was announced just last evening. Having said that, a lot of other stocks which are also making the headlines, and Nuvama has come out with a recent note wherein they're talking about the possible inclusions and exclusions with the next MSCI rejig. They're talking about low probability inclusions, and Cummins, IDFC, First Bank make it to that list, saying there could be a special case inclusion as well, which could be Ashok Leyland. So all these stocks are in focus this afternoon. A couple of brokerage downgrades as well coming in. We flagged off as to how cement is really, out of favor for brokerages. No different today as well, 1.5% lower for Ultratech. And especially given that Ultratech was the one which saw the maximum run up, has the highest capacities, and is the largest cement player in the country. Pidilite, Gujarat Gas are some of the other names which have seen some brokerage downgrades coming in. But yes, can't take your eyes off or mind out of what's happening with GST, and Delta Corp is that one stock that's been seeing the maximum selling pressure. In fact, Aman joins in from our research desk to tell us a little bit about why so much of a fall in Delta Corp alone.
Delta Corp coming under acute pressure in today's trading session as the stock opened gap down and continues to reel under pressure, and that's largely on the back of the news that the GST Council has levied a 20% tax on online gaming, casino, horse racing. This is on the full value of online gaming, horse racing and casinos. So now they have decided to completely do away with the distinction of game of skill and game of chance in the case of online gaming. Now this has huge ramifications for Delta Corp, which derives close to 80% of their gross income of operations from gaming operations as of FY23, and 15% of their gross income from operations from online skill gaming as of FY23. Not just that, the stock as well from the recent 2020 lows had run up close to 250% plus. So that's why as well you're seeing an impact. Delta Corp also has plans, and very ambitious plans, for the Delta Tech IPO, which would now perhaps be scaled back or perhaps be looked at a different time frame. The company had planned to raise close to 550 crore rupees via the IPO. And remember, Delta Tech offers real money games like poker, rummy, ludo, battle, daily fantasy sports. This is via their platforms Adda 52, Adda Games, as well as Adda 52 Rummy.
We have an IPO which we should be launching very soon, and once that happens, we'll get a little more aggressive on acquisitions and, of course, growth of our existing platforms. we see a lot of excitement in the online gaming business, and we are just waiting to have a armory of cash which will help us. We have to look at the markets, etc. We are launching, a roadshow, etc. very soon, and figure out what the demand is and look at market conditions and launch. Once that happens, we will look at all the options available in organic and inorganic growth. The cost of acquisition of players will go down as our volumes increase, and therefore we hope to improve our margins based on that. There is no other way. The main cost in this business is bonuses and advertising, which we will have to continue to do to make sure we can acquire more and more players, and that is the name of the game actually in this business.
So I think Nazara continues to be a very stable gaming platform that we have built over the years. The skill-based real money gaming business contributed to 5.2% of our FY23 revenues. Basis this new policy, there will be some impact, and I'm sure our teams as well as the industry will work very closely to mitigate as much impact as we can over here. But from an overall Nazara perspective, I think we can easily take this in our stride. We have grown over the last few years, very, very aggressively on the back of investments in great gaming companies that we have invested in. Especially most of our investments in the past have been in the non-RMG space. And many of these businesses have grown very well. And we've got a playbook that is now working very well. So my team in the last few quarters especially has done a lot of work with companies in India as well as globally, especially given the market sentiments and attractive valuations that are available. So we are definitely looking at making additional investments, additional M&A activity in many of the segments that we operate in.
Okay, so yes, Nazara Tech is taking it in its stride, but not really Delta Corp. Let's welcome our guests as well. Naresh Mirani, Kunal Bosra, as well as Sudeep Bandyopadhyay join us on the show. Kunal, the joke on the street is that the money is flowing from the one gambling and gaming arena to another, and I'm talking about BSE because that stock is flying higher in the trading session today. Your call as far as Delta Corp is concerned, which is obviously taken a 20% knock, and then BSE, which is up a good 10%.
Yes, Anisha, even I have read that. But I think on Delta Corp, it's a classical, a stock which has proven time and again that you try and take a bet on the stock on a trending basis, and the stock disappoints clearly. We've seen that happening for Delta Corp in 2022 when the stock was going through some bit of recovery in the first couple of months of 2022, and then came a very sharp, very swift correction for the stock. I think it fell down to as much as 160, 165 levels. From there, it took almost 5-6 months for the stock to recover and to come back towards 200 levels. In the last 1 or 2, I think 2 weeks specifically, the stock was trying to claw back again. But then whenever the stock has or the tendency of the stock to come back into the F&O band, we've seen that playing as a negative effect for the stock price. Add to that the negative news which has happened for Delta Corp. So again, a stock which I would clearly avoid in every kind of circumstances, whether you are looking to buy on momentum or on dips. On the other hand, I think BSE could be a classical case where the stock has actually run up, I think 90-95% in the last 3 or 4 months. From the March close of 405, 406, the stock is almost at 770, 760 levels, which means that the run-up for BSE is also exceedingly high, and I would probably expect the stock to get into some bit of profit booking. So no positions to be initiated on Delta Corp, at least that's what I would recommend. And for BSE, good time to take out profit.
Okay, so that's the take coming in as far as BSE and Delta Corp is concerned. Separately, what else is happening in the market in terms of the big movers today? It continues to be Mazgaon Dock, which is higher by 8%. Mankind Pharma is having a great day. JB Chemicals is something that we flagged off. And some of the other defense names like MTAR Technologies, etc. as well. Sudeep, what's your take regarding the entire defense pack? Is there any name that still looks attractive despite the run-up?
Good afternoon, Anisha. I think, defense has been an excellent area, has given investors great return over the last 1.5 years. But looking at the valuations at which some of these stocks are currently trading, I would definitely advise caution and tell investors investors not to get in at these levels. If somebody is holding on to an Mazda stock or BEL or HAL, maybe they can wait and keep watching before rushing to book profits or sell their stock. But fresh position, fresh entry at these levels is dicey. Couple of reasons, I think. One, while these companies are doing all the right things, getting loads of orders, one has to remember that the valuation at which they are already there factors in pretty much everything which they have got till now, and also something more. So it will be a long time before these orders get executed and profits flows in. Also a lot of time between the expectation of a multiple re-rating again and again may not get actualized once again. So it is better to be cautious. If somebody has to play defense, I would probably look at a stock like a Bharat Forge, which predominantly is a forging company. There is traction in that business as well, including class 8 trucks in US. But they have a very well developed defense as well as aeronautics business. And that is where there's a lot of traction. So maybe one can try and play this through the Bharat Forge stock, and that can be bought at current levels.
Okay, so Bharat Forge is one stock that could be bought at current levels. But Naresh, your own sense, and as far as the market texture is concerned, we are seeing a bit of a bounce back in the PSU bank names while cement is down and out.
So overall, if we look at the space, the Nifty has not made a new all-time high, but today we are seeing small cap and mid cap indices making all-time highs. So there is a little bit of a pause in places where there has been a rally. So out here, PSU banks made a strong move over the last few sessions, and say a Bank of Baroda moved up from 190 to 210. A little bit of a pause, but the trend is still positive for the whole sector. The interesting one could be going forward if State Bank of India can sustain above 600 levels. That's a resistance. If it can sustain 600, then it can go towards 625, 630, which is the previous all-time high. So PSU banks still promising. SBI could be interesting if it sustains above 600. Cements overall, the problem is the trends are not strong. It's been a slow and steady run-up even for the largest name like Ultratech. It has made very nominal daily moves, but it has slowly and steadily gone up from 7,600 to 8,500. So the trend is positive, but the momentum is not great. So avoiding the cement space as such, the mid cap and the small cap cements could be interesting. Birla Corp, etc. are trending, but the large cap does not look that exciting.
Right. Okay, just looking at a couple of other buzzers, look at Piramal Enterprises. That stock is holding up about almost 4% as we speak right now. There's an upgrade coming in on Piramal Pharma as well, wherein Nuvama has now initiated coverage. They put a price target of 130 on Piramal Pharma. That stock will just come up for you on your screens next. They expect a strong recovery in their overall business in the subsequent years to come. And that 1,050 crore rupee rights issue and better cash flows, they're saying are going to de-stress the balance sheet as well. Remember, about a quarter back when the company did report its earnings, there were a lot of concerns raised around what is the longevity of the business and the growth from thereof. And you did see a fair amount of crack as well come by on the stock price. But Kunal, just very quickly, both on Piramal Enterprises, and I don't know if you track the charts of Piramal Pharma at all.
Well, I do track Piramal Enterprises. So I think that's a stock which looks very attractive to me on the charts, Aisha. And I think the stock has now formed a classic pennant formation on the daily time frame. So I think at 965, 970, where the stock is trading right now, it looks fairly attractive for a potential target of at least another 10%. Both the very near term. So I would be very bullish on Piramal Enterprises. Now, Piramal Pharma, the history is of course a bit restricted, because of which only the recent trends for Piramal Pharma have been looking attractive. So from the point of 70-75, when the stock formed a low, to now 1994 plus levels, where the stock is trading right now, I think this has been a decent recovery for Piramal Pharma, a more stable recovery. But because of the paucity of chart patterns or the price patterns for the stock, I would probably expect that maybe over the near term we can expect 105. Would be difficult to forecast it from long term play.
That's a trade coming in as far as Piramal Pharma is concerned. But the other name from the entire pack which is quite active is Mankind Pharma. Let's do one thing. Let's slip into a very short break. But as we do that, listen in to the bite coming in from Dipan Mehta. He's quite positive on Mankind Pharma. Listen into his rationale.
on to companies which are more consumer focused. From that point of view, Mankind Pharma, I think certainly looks very, very interesting, with 97% of the revenues coming from the domestic market, and they have a very strong position in their brands. Their strategy also is now pretty well appreciated, having focused on tier 2, tier 3. I understand from the industry sources that their average brands are 10-15% cheaper than the popular ones, and the kind of manpower they have on the street is quite phenomenal. So it's just a compromise on the valuation. So we're just waiting for the right point of time when Mankind Pharma will have that perfect margin of safety and risk return profile in favor of the investor. So I would say that our top pick within the sector has to be Mankind Pharma, a disclosure that we and our clients may be invested. And we would like to look at and advise as well to move, increase the exposure to Mankind Pharma. But I'd like to see this quarter's numbers to have a more firm and more convinced view on the stock.
Last few odd minutes or so, absolutely flat for the Nifty. Continued to circle around that 19,500 print for the Nifty futures. Sectorally, of course, while there is no meaningful mover, but yes, real estate is the one which is cracking hard. So if I just look at the constituents right now and just going to bring them up on your screens, you are seeing some bit of pressure on the Nifty Realty constituents, which also, by the way, has now recovered from the session lows, at least from the first half hour or first hour of trading or so. Other stocks under pressure, of course, UltraTech Cement, there's Tata Motors, Maruti, Bajaj Auto. But again, these are not any meaningful cuts. Less than 1% is, so something that you can completely ignore. Infosys, IndusInd Bank, Unilever, Hero MotoCorp, Divi's Labs, Tata Steel, HDFC Bank, L&T. Just at best, we're only dragging our feet. Pidilite, that's the other one that I just want to bring up for you on your screens. And that stock has been under pressure. There's been a downgrade by Citi to now a sell from the earlier buy. They've cut the target price also from 28.80 to now 22.20. They're saying that the current valuations are factoring in the margin expansion benefit, and they do not see any meaningful upside come by for Pidilite. But Sandeep, for a stock like Pidilite, which has been a multi-bagger for those who got in at the right time, do you think if indeed a decline sustains, although it hasn't even today, that should be a good buying point perhaps?
Absolutely, Aisha. It's a fantastic stock. It's a fantastic company with the kind of products, unmatchable products. The only challenge is the valuation. I think even the report of the the brokerage you mentioned does talk about the valuation and the discomfort at the kind of multiples at which it is trading vis-a-vis the projections even which the company has given and the margin expansion which they plan. Even if you bake in everything, I think the valuation does look a little rich, and that's where the challenge is. So while it's a great company and it's definitely worthwhile buying if there is some meaningful correction at some stage, the current level going aggressive and buying into this stock may not be advisable because the margin of error is very, very limited.
Okay, so the margin of error is limited there, but do you think the margin of error is limited for the IT counters as well after the kind of drubbing that they've seen already, and it's more likely that they'll head higher rather than lower?
Anisha, I completely agree with that logic. In fact, I've been telling my investors that it is definitely a good time to look at IT companies. I mean, there is no need to rush in and put all your money in IT now, but of course, it's a good time to start nibbling into it. We can keep debating whether this quarter will be the worst or the next quarter will be even bad, but it's a matter of time before they regain their momentum. Our gut feel is, and our reading is that third quarter onwards, things should start coming back on track. I won't be surprised if some of the companies start getting back on track from second quarter of current fiscal itself. And probably, we have factored in all the bad news for most of the counters, and script like HCLTech, the shares like even TCS, Infosys. There is absolutely no harm in starting to accumulate at these levels, which definitely seem attractive for an investor who has at least 1 year plus time horizon.
Couple of other stocks which are in focus, and Titan, this is the second downgrade, by the way, coming in on Titan last evening. It's now been downgraded to a neutral from a buy. The target price, although, has been held at least by Citi at about 32.80. But even after the quarterly updates, them being strong, there was another brokerage, I think JP Morgan or so, which did mention that Titan valuations are looking pretty ripe and that there would be limited upside. Similar is the reasoning from Citi as well. They're saying in the consumer space, they actually like a lot of other names, but yeah, they're saying Page, Titan, along with Pidilite, like I earlier flagged off, are their top sell recommendations. But similar a thing really, Sudeep, when it comes to Titan as well. A meaningful correction, if at all it comes by, does that become a good buying opportunity?
Well, I don't agree fully, Aisha, with the report on Titan. In fact, these are some stocks which are, or companies rather, which are doing pretty much everything right. If you look at the Titan update, the business update, which came in a few days back, for a minute, leave aside the jewelry, where also there has been a fantastic growth. There was marriage season, there was Akshaya Tritiya, so it was kind of expected as far as the quarter gone by. But the other peripheral businesses, including the ethnic wear, Taneria, they have also clocked fantastic growth. The eyewear business has picked up. The watches segment has started doing pretty well. So it's firing on all engines. And I don't see, just because the second quarter doesn't have a marriage season, or there are no major festivals and all that, just to say because of that we will see a the slowdown in growth of Titan. I don't agree with that logic. I think this is the most recognizable brand and trusted brand in the gold jewelry segment, undoubtedly. And with the propensity of Indians to buy gold, it is not going away. So overall, I think Titan will continue to reward investors. The question is whether you buy today or you wait for some correction and then buy. I think for a long-term investor, waiting for a correction and remaining in the sidelines for these kind of counters doesn't make sense. So my suggestion to investors in Titan, if you want to get in your portfolio, just go and buy. Don't buy everything today. Buy slowly, but do buy. If you are talking about the entire jewelry segment, I will also like to talk about Kalyan Jeweler. I think that they are also showing all signs of an upward movement. So that is another stock in this entire jewelry space which definitely should be looked at.
That's about Titan, but it's last 30 minutes of the trading session. And remember, it's the last 30 minutes for trading for HDFC Limited, because come tomorrow, it'll be merged with HDFC Bank and there'll be no scrip called HDFC Limited. So last 30 minutes as far as that merger impact is going to be. Remember, with respect to the weightage of HDFC Bank on the Bank Nifty, the combined weight of the entity is going to be almost 27% thereabouts. And we're expecting that there could be flows to the tune of around $70 million with respect to that particular entity. We're expecting that there could be some outflows from the likes of ICICI Bank, etc., on account of the weighted changes. So that will be important to track. Let's keep an eye out as far as the next 30 minutes is concerned. Also watch out for LTI Mindtree, because that's the new kid on the block as far as Nifty 50 is concerned. So that will get added to Nifty 50 tomorrow. And again, Street was expecting that there could be some flow management as far as that stock is concerned. JSW Steel becomes part of Sensex. So on account of that, there was a net inflow of around $120 million expected on that one. All of this will come into fruition in the last 30 minutes of the trading session today as well. So just flagging out that you need to have all of these counters on your radar. Kunal, your word as far as this entire adjustment is concerned, and also any closing trades that you are recommending?
So yeah, I think in fact, the reason why HDFC Limited and HDFC Bank was actually seeing some selling pressure over the last 5 or 6 days was on the back of this news, this event, which is much talked about for the markets. But I believe post the merger of sorts and post this event getting completed, I would probably expect HDFC Bank to get back into the line of outperformance, or at least get back into the line with respect to market performance, because HDFC Bank has been a major drag for the entire banking index, and I think one of the major reasons why the Bank Nifty has significantly underperformed in the last 7-8 trading sessions. So I believe at least that could probably now start to even out for the banking index, and we may expect some bit of recovery for HDFC Bank. In terms of closing trade, L&T is a stock which looks attractive. In fact, the stock now at 24 70 60 mark looks fairly poised for a breakout back again on the upside. So would be looking to suggest the buy on L&T.
You, what's the closing trade, and if you have any thoughts around the entire readjustment that we're expecting, LTI, Mindtree, JSW Steel, HDFC Twins?
So overall, expecting HDFC Bank to start making a reversal from tomorrow. Closer to 1600, 1640 is an accumulation zone for the stock, and eventually the stock could go back to 1750 levels. So positive on HDFC Bank, the dip should be an opportunity. Maybe it ends up lower today and say at open tomorrow. Positive on that one. Overall, on the markets, index, the big difference could come from HDFC Bank, so that would be on watch from tomorrow. The stock I would like to keep on adding is Ashok Leyland. That's a stock getting closer to new 52-week highs and all-time highs. Made an attempt towards 170.72 today. Good indications of a possible breakout going forward. So expecting this to break out.
So Deep, we'll let you go on that note. Great to have you on the show as always. We'll take a very quick break with news that we're still absolutely flat. The broader market and stock-specific news action is what we're seeing in the market this afternoon.
Markets as well, quite a bit of tizzy movement, if I can call it that, because we are slipping quite sharply as far as Nifty is concerned, below the mark of 19,400 as far as the index is concerned. Let's see if the pressure is coming from the banking index, because that's been the sore loser since the start of the trading session. My guess is that that would be one of the big culprits. So yes, we are seeing quite a bit of decline. It's not the day of the weekly options expiry or anything like that, but I think a lot of adjustments are taking place on account of that entire rejig of HDFC and HDFC merger. There will be stocks coming in to Nifty 50, the Sensex, JSPL, JSW Steel, LTI, Mindtree. A lot of these stocks are going to be in focus on account of all of that. And that's the kind of adjustment that we are seeing. Having said that, the market might also be a bit nervous around the slew of data points which are lined up for us. Post-markets, not only will get the earnings of TCS as well as HCLTech, there are a lot of macro data points as well on the anvil. Of course, we'll get the IIP data for India as well as US. Look at that, the trajectory for you on the screen. For both of them, we are expecting there will be a bit of moderation. But for India, and other worries with the likes of with the increase in the prices that we have seen of tomato and other prices over the last month. Maybe the month of June might be a bit of aberration, and July might still see a bit of a spike. So we're watching out for these macro data points and IIP data as well. So really, it's going to be a very, very busy evening, to say the least.
Yes, it's going to be, and busy morning as well for us. We're going to be reacting to not just the IT numbers from TCS, HCL, but you'll have the US CPI print as well. So yes, lots to track on our plates. But let's welcome on board Anand Tandon as well and find out what he's making of the market right now. Anand, I don't know how closely you've been tracking the IPO market, but just looking at the subscription figures coming in for Utkarsh Small Finance Bank, one would assume that given that it's of low face value, there will be a lot of perhaps retail interest in this one. The grey market premium is already, indicating a fair amount of premium running on this.
So you're right. I actually don't track the IPO market at all. I believe that there is enough opportunity in the secondary market. IPOs need to get listed and trade for a while before you can understand what their DNA is like. So I will have to pass on this.
Sure, no problem there. Vedanta, the AGM is slated today, and this is going to be an interesting one, especially after the breakup between Foxconn for the chip manufacturing plant. The street would be perhaps looking to hear out as to if Vedanta has any comment to make on this one or not, or anything that's discussed to that degree. Right now, of course, it's JSW Steel, NMDC. These are the ones which are actually holding out in trade. There's a sudden spurt in Sun TV as well. This is not how the stock started off in trade, but it's now spurt up to the session highs. Sun TV looking good by almost about 3%. That said, Lupin is the other one, Astral Poly holding out, and Piramal Enterprises, like we earlier flagged off. Still continues to reel under pressure for Delta Corp, still down about almost 23% or so. In fact, data is suggesting that Delta Corp has managed to erase all of its year-to-date gains with today's fall itself, that of nearly about 23% or so. Anand, what's your take now on, Nazara? I'm not going to go to Delta, but Nazara, which is, gone on record and clarified that their only 5.25% of their revenues gets linked with this GST of 28%, which has been slapped.
I mean, it's a difficult business, all said and done. The GST may not impact them directly, which is good. But, it's been around for a long time. It's not like it has, put fire to the market. Like most media companies, actually, games also have a life where some of them will do exceptionally well and they become highly popular, and then after a while they just vanish. Just look at the games that you had on Facebook not too long back, where there were farms and all kinds of things happening, and then finally now nobody even speaks about them. I don't think anybody knows their name as well. So it's like a media business where if you get a blockbuster, you can make potloads of money in the near term. Sustainability is going to be an issue for any one particular game. There are not too many that are able to attract that kind of attention. So you have to look at it as a regular business. The fact that GST is not impacting as much as perhaps it is to some of the other players in the market is good news, but it is not necessarily the only thing that you should be looking at. The general outlook for the gaming industry is fairly decent, but requires a lot of investment, and it will be a loss leader for the most part. Nazara, to that extent, has done reasonably well in being able to control it, but obviously to that extent doesn't show the kind of exponential growth that one could get if you were really putting money behind trying to get new users.
So that's the take coming as far as the entire gaming industry is concerned. In the last few minutes, there's a perk up on Paradeep Phosphates as well. I think one of the brokerage notes I read in the morning, they had initiated coverage on that counter, seeing a bit of a reaction right now. Radico Khaitan, that stock too has been having a good run of late. On the losing side, it's Electra Green Tech, which is a bit under pressure, and LTI Mindtree, that one too is seeing a bit of a selling pressure, so maybe a bit of a readjustment happening there. And JSPL 2 is down in the trading session. Kunal, let me quickly come to you and talk about the market setup itself. This sudden fall that we are witnessing in the Bank Nifty and Nifty, do you make too much of it or just adjustments happening?
I think it's just adjustments happening for the HDFC and HDFC Bank. I think that's one of the major reasons why the markets have sold off in the last half an hour. And I would probably believe that this could just be a one-off, and it could probably be also an indication of maybe a terminal sell-off for the Bank Nifty, where we may probably now getting into some sort of a bottom formation zone. So what was actually happening is that the last 6 or 7 days, HDFC Bank, HDFC Limited, they were making patterns of lower highs consistently over the last 7 or 8 trading sessions. And so was the case with Bank Nifty. Even the Bank Nifty had made a pattern of lower highs for the last 7 days consecutively. So I think on the back of it is where you're seeing the selling pressure, especially in the last half an hour. It's got to do also with the VWAP adjustments, which happens because today is the expiry day for the HDFC Limited in futures as well. So I think that the selling predominantly seems to be on the back of it.
So that's the take coming in, but let's go across to my colleague Harsh. He's joining in to talk to us about the whole host of adjustments that are expected on account of this HDFC merger. Harsh.
Well, yeah, so as Kunal was correctly pointing out, probably a bit of a slide coming in on the Nifty financial services, banking as well, Nifty Bank as well, lower. And that's largely on the back of some drag coming in from HDFC contributing to the lower or the slight, sell-off coming in there. And let's have a look at what's happening in HDFC. Of course, HDFC Bank now, starting tomorrow, to have a 14.4% weightage on the Nifty. On the Nifty Bank, weightage to go up from 27% to 29%. So a couple of percentage points higher on that one. Also, the inclusion on the Nifty will be LTI Mindtree. 0.5% is the weightage that LTI Mindtree will have on the Nifty. On the Sensex, JSW Steel will replace HDFC Limited. 0.9% will be the weightage that JSW Steel will have on the Sensex. So all of those rejigs to be effective tomorrow. And of course, some MSCI adjustments also happening, which is probably the cause of the pressure on both the Nifty Bank, financial services, as well as HDFC Bank in late trade today.
Take coming in as far as the flows adjustment is concerned. Just remember there's a Vedanta AGM which is underway. I'm just going to read out some of the flashes and the commentary coming in. Mr. Agarwal is talking about how they're likely to begin the historic foray into the semiconductor and display fab this year. They've lined up partners, they are saying, for semiconductor ventures. So even if Foxconn has walked out, they are saying that they have lined up further partners for the semiconductor venture, and they're committed to make sizable investment across business verticals in the coming year. So that's the commentary that we have got so far. We'll try and cut out more details if he speaks anything incrementally about that subject. But for now, these are the key highlights coming in as far as the management of Vedanta is concerned. Separately, in terms of the market action, well, it's NCC which is doing quite well. Paytm has perked up 6% and Policy Bazaar too 6% higher. Anand, your take regarding these so-called new age tech companies, Paytm and Policy Bazaar, if you track either?
So they are at least showing some signs of being able to make some money. But that said, once you actually start looking at how much money they will make compared to the valuations, I think valuations to me still look somewhat on the pricey side. Not that the advantages, of course, are there. That at least something like Paytm, for example, has a very vast download already on most people's phones, and as a consequence, can actually leverage that quite well. And they are also trying to play other sectors like ONDC, etc. So other than the fact that there is a valuation issue, which to my mind still persists, and therefore there are simpler ways of playing some of these, the themes that one would look at, for example, financialization, etc. They are not, they are one of the survivors that are likely to remain. I would still be a little worried about paying for the kind of prices that the market is willing to pay now.
Right. Okay. In fact, since we're talking about Paytm, let me take it across to Sharad as well and get in a sense of what the dealing room chatter is around this stock. Sharad?
Well, in focus, we are having Paytm, and what we are gathering from dealers is this buying happening in both the counters for HNI as well as domestic institutional investors. Even the volumes have been very high, and the order, especially in the first half of the day, has been very strong. Also, the important thing is the stock's name is coming as a new entrant for two fund houses, the first one being HSBC Mutual Fund and the second being the Axis Mutual Fund. Now, overall mutual funds are having roughly 2.71% stake for the month of March, and recently the new shareholding pattern is expected to kick in, and that number is expected to spike up. Of course, the stock also has been in a rally because of foreign broking houses upgrading the stock, and the important thing is that the Q1 revenues, that is expected to go up as high as 4% on a sequential basis, while the contribution margins are also expected to jump by 4 basis points to 55%. Now, this preview is coming as per Morgan Stanley. The stock itself has almost doubled from its November lows seen last year itself, and the highest target price amongst all the brokerages is by Citi, with a target price of roughly 1260 rupees per share. But there are certain risks also associated with the company or the overhang, and the first thing is, of course, the street is expecting that the Paytm would actually turn accountably profitable by FY26, and also there is an overhang where Ant Financial, which is still holding roughly 25% stake in the company, they might be looking to pare down their stake going ahead. And of course, on a long-term basis, Jio's financial services arm will also deter the company.
Okay, Sharad, we'll leave it at that. That's the buzz that we're picking up currently when it comes to Paytm. Let's take a look at some of the other stocks also which are in focus. And let's check in on what Reliance is up to, considering this had its fair share of contribution to take the index to that lifetime high just last week. Morgan Stanley has resumed its overweight stance on Reliance with the target price of 32.10. It's saying that they're starting to monetize their multiple investments simultaneously, still deploying capital in new arenas. And the narrative now will shift on earnings positively to an upgrade cycle. Anand, do you also believe so, that finally the time for Reliance to perform has come?
I think Reliance has done a fabulous job in terms of building new businesses out of almost something that was not there a decade ago. And you look at the price that the valuation that is being ascribed to retail, it is now bigger than the traditional business. So it's obviously been a phenomenal kind of move that they have managed to get into. With the demerger happening and the next demerger likely sometime in the future, I think the value of the company will actually increase overall, because what you're seeing right now is, each of those companies will add more value overall. So if you're buying it before the demerger, then obviously you're getting all of that. That said, again, the sum of parts will be more. At this time, you're more or less pricing in at least the current business likelihood. You have to be a lot more positive about the future and have a longer term time frame if you want to hold on from here. But I think if you are looking at one stock to represent India, perhaps Reliance is that.
Hold is Reliance if you want to get something which has a multifaceted exposure as well. But let's do one thing. Let's go back to Sharad, because he had done some analysis in terms of what the mutual funds have been buying and selling in the month gone by. Sharad, tell us what are the key details? What are the mutual funds looking at? Which stocks they're adding, trimming positions in?
For the month of June itself, we see more than 8,000 crore has been flushed in by the mutual funds for the secondary markets. And do remember, there are certain segments where there has been a strong addition, which is the healthcare, auto ancillary, as well as the metal segment. Now the reduction in exposure coming in for the IT, financials and the staples pack. And interestingly, the cash levels, that has also come down on a month-on-month basis to almost 4.8%. Now let's look at what the action is coming in the large caps. We can see buys coming in for Coal India, ONGC, HDFC, while sell is being reported in the banking names such as HDFC Bank as well as Axis Bank. Of course, we also have PNB and Tata Motors also coming to this list, while the newest tech stock, we have Zomato as well. Now, amongst the mid cap, we see over here we have NMDC, Indus Stars and Nykaa being strong buys coming in, while the sells coming in for the Indian Hotels and Federal Bank. Apart from this, also we have Bank of Maharashtra and NHBC coming into the list for the mid caps. So we did speak about the large caps and the mid caps, but the action is also there in the small cap space, as a lot of inflows. There are record inflows coming in the small cap funds, and you can see stocks, especially in the power segment, infra segment, Suzlon, TD Powers, and even Kalyan Jewellers saw very strong buying coming in the small cap, while IEX, HCC saw cuts across the board. Apart from this, even Manappuram Finance saw strong buying happening, while for sell, there was Rain Industries, and from the banking space, RBL Bank.
Okay, that's the mutual fund action that we've seen across market cap categories. Just want to bring up what some of the cement plays are up to. And remember, UltraTech is a rank underperformer. UBS has downgraded it to a neutral from the earlier buy, although the target price has now been adjusted to 8,900 thereabouts on UltraTech Cement. This, of course, has been an underperformer. Dalmia Bharat also has been downgraded to a sell from the earlier buy. There's a contrarian negative view according to UBS on most of the cement plays, and similar is the view on Ambuja as well, wherein it's been downgraded now to a sell from the earlier neutral. They're saying that rising competition, expensive valuations are all factors which are at play, and which is why the downgrade pretty much across the sector. Margin tailwind for now, but pricing is fading away, may worsen because of overcapacity, and companies are resorting to organic expansion while inorganic deals are now drying up. Although they say that they prefer ACC and UltraTech, and anti-consensus sell on Dalmia Bharat is what they're maintaining right now. Anand, what's your opinion on cement, at least in the near term, because traditionally the monsoon quarter is in any case the weakest. Do you think the underperformance will last for a while?
I think in this sector itself, one should be underweight on. There is, there are only two levers, right? Your volume grows up or your prices go up. Volumes are going not growing as much as people would expect given the kind of capacity that is coming up. So with that capacity, you will automatically have to reduce or not be able to increase prices as much. So there will be quarterly performance changes because of the fact that your inputs will change. But overall, it's not as if you have any great margin levers available for you to be able to price yourself and get a proper return on capital. So net-net, it's a business which is still expanding faster than it should. Most companies are putting up more capacity, and that means that the ability to operate at 80% capacity utilization, which is where you begin to make some good economic returns, keeps getting postponed more and more. I see no reason that you should be, invested in the sector given the valuations that it's already trading at.
Okay, and that's the take coming in on the entire cement pack. But before we wind up for the day, let's also get in some BTST trades going. Naresh, what's on your BTST list?
So first would be a buy on Ashok Leyland, stop loss at 167, target price of 175. Second is a buy on Biocon, which had earlier seen a breakout move at 250 with large volumes. Retest done today showing strong recovery with volume stop loss at 256, target price of 270.
Right. Kunal, what about your BTST ideas?
Flash, I would go with Piramal Enterprises, the first stock. Have been bullish on the stock earlier, so would recommend a buy even at current levels and expecting this to be a classical breakout for the stock, hopefully in the near term. Targets of 1050 for Piramal Enterprise, stop loss at 900, and extremely bullish on PSU banking stocks. So PNB is a stock which has done exceptionally well in the last 1 or 2 weeks. My earlier targets were closer to 62 for PNB. The stock has reached those levels, but traders could look at a fresh buy for a revised target of 72 on PNB and stop loss at 56.
The other pocket, right? PSBs, which are seeing renewed vigor, and it's not just SBI alone now, but the smaller ones which are seeing a bigger buoyancy. What is your take on the PSB pack? Anand?
Right. So, it is when the smaller companies, especially in the public sector, start to move up that I become more and more scared of where the market is headed. Most of the smaller banks actually do not know how to lend. And that has been demonstrated again and again. They just blindly lend without worrying too much about the credit risk. PNB is not a small bank, but it has had a checkered past in terms of its lending book. Currently, obviously, most of these banks will be able to give out credit. Whether they will be able to recover credit back is a different matter, and that we'll get to know only after 2 years. So for now, if you're chasing top line, yes, certainly the PSBs are good. I would think that, what is wrong with HDFC today? I mean, forget about the technical parts of it. Trading at probably less than 2.5 times 2 years out, and will continue to grow at 15, 16, 17% kind of top, profit growth. Year after year, it has always done that and will continue to do that. There are some advantages to be got because of the fact that they now have the mortgage book inside the bank rather than outside. And, so there will be some issues in terms of being able to get more liabilities, but I think HDFC is in a position to do that. So if you're looking for a reasonable, high-quality bank over a long period of time, buy that rather than be very experimental. If you want to try and experiment with the PSBs, make sure that you have a strict stop loss around.
Let's also get you a slice of what really you need to keep on your radar come tomorrow, and just going to highlight what are the individual cues to watch. Remember, tomorrow is HDFC Bank's record date for the merger. There is that likely index rejig, or not likely actually, the index rejig takes place from tomorrow when an HDFC as an entity or a scrip ceases to exist. It's JSW Steel which is going to replace HDFC in the Sensex, and LTIMindtree which is going to replace HDFC in the Nifty 50 weekly expiry. Earnings reaction, of course, from TCS and HCL Technologies. They're going to report their numbers post-market hours today. So that's something that the street is going to react to first thing tomorrow morning. And then, of course, there are a slew of earnings for tomorrow as well. You'll have Wipro, Angel Broking, Tata Metalics, Federal Bank, and, of course, macro data as well. IIP, CPI back home. And then, of course, the US CPI print, which is going to come out tonight. And our markets will react to it come tomorrow morning. So lots on our platter in that sense tomorrow as well. But just counting down to the close now. Anand, great to have you on the show. We'll let you go on that note. Good speaking with you as always. Kunal, Naresh, we'll see you again with all the market action tomorrow morning. Just want to flag off how TCS as well as HCL Technologies are closing for the day. TCS mildly soft, and similar is the picture for HCL Technologies as well. But it's actually the Nifty which saw a sudden drop in the last half an hour or so from the session top, and it's closing in at the session lows. It's not a big slide on a net basis, but it's a slide nonetheless from the session top. 19,385 is where we're shutting shop for the day. Similar has been the picture for the broader end of the market as well. A drop in the last lap, and it's the declines which have taken over within the F&O basket with a count of 98 standing to the reds. Sectorally, it's been real estate, telecom, technology, textile and power along with cement which have been ranked underperformers. On the flip side, media, financials, metals, pharma and autos and banks to some degree have managed to hold out in the green. Just want to give you some color on what really transpired with some of the losers and large cap ones at that. UltraTech Cement, after those downgrades coming in, UltraTech lost nearly about 2%. Adani Enterprises, Infosys, Tata Motors, HCL Technologies, L&T, Maruti were all ranked underperformers. But I think the intraday graph that we should bring out right now is that of HDFC, because these are the last few seconds that HDFC will trade as a scrip, after which come tomorrow it ceases to exist. It's going to be a combined entity with HDFC Bank. HDFC, on the last count ever, it's closing in with a downtick of 0.7%. On the gaining side though, that's of course HDFC in trade for you. On the gaining side though, you had the likes of an ONGC, Eicher Motors, JSW Steel, Kotak Bank. Those are some of the stocks which actually held out in trade and did that bit of tug of war between the gainers and the losers. Within the broader end of the market, it was Astral, NMDC, Piramal Enterprises, Lupin and Shriram Finance which managed to gain ground. Of course, in the red for Delta Corp, for Bata, for most of these counters like an LTIM, Gujarat Gas, etc., which closed in the red. But that's pretty much it on this edition of Closing Trades. We'll see you again with market action tomorrow morning at 8 a.m.